Welcome, day traders. As the Fed meeting is approaching, trading on stock exchanges is getting less buoyant. Although the majority of analysts expect a 75 basis point rate increase, trading volumes are likely to remain low on Tuesday and Wednesday. Apart from that, 175 companies in the S&P 500 index are going to reveal their earnings reports, as the usual sentiment on Wall Street will certainly impact Asian stock markets. After the close of the session on Wall Street, Walmart disclosed quite a dismal quarterly report. The largest U.S. retail chain cut its profit expectations until 2023 due to inflation impact on the shopper choices. It signals a decrease in purchasing power and the deterioration of the economic situation. Economic expansion in the country is slowing down as inflationary pressures are weighing on consumers and manufacturers. However, a slowdown in economic growth triggered by high prices and other challenges gives the Fed the opportunity to normalize monetary policy more smoothly. Such a scenario also implies a 75 basis point key rate hike. Moreover, Fed officials also hinted at the likelihood of a 75 basis point rate increase. There were no signals from the watchdog about 1% rate increase. The trajectory of the US dollar depends on the Fed's key rate decisions. If the regulator finds it appropriate to maintain an aggressive monetary policy, the US currency will retain its rally. The US dollar index slightly decreased against its rivals to the level of 106.50 ahead of the FOMC meeting. It's likely to maintain its long-term bull run amid expectations of an euro rate hike and its safe haven status in times of a global economic slowdown. Meanwhile, its short-term momentum is less clear. After reaching a 20-year high 12 days ago, the US dollar index has been steadily declining, moving in narrow range. In the Asian session, it tried to break through a high of 106.51 but went down, widely fluctuating in the range of 106.20 and 106.59. The next support levels are located at 105.79 and the previous lows is 103.67. The resistance level coincided with a recent high of 109.29. As the rule, when the US dollar weakens, its counterpart edged higher. The yen reached 136 yesterday, recapping some of its Friday's losses. So it's hit a two-week low. However, the downward movement of the US dollar is still quite limited, so the intraday strengthening of the yen is rather modest. Even the slightest increase in the risk appetite, which usually boosts US Treasury yields, adversely affects the safe haven yen. For example, today the dollar-yen pair has been rather volatile, rising and declining. At the same time, amid a rise in the US government bond yields and the difference in the key rates between the Fed and the Bank of Japan. At the time of making this video, the yen was trading at 136.51, moving in the range of 136.25 and 136.73. Meanwhile, the Bank of Japan is closely monitoring the state of the economy, leaving the yen weak and expecting wage growth in the country. The depreciated yen is hurting some businesses and the consumers. The regulator said it would intervene if the USD JPY rises above 140. As a reminder, in Japan, the Minister of Finance is legally authorized to conduct interventions as a means in foreign exchange rate stability. The last time the Japanese authorities conducted a yen buying intervention was in 1998, when the USD JPY grew above 140. Today, the Australian dollar was able to touch a monthly high of 0.6980. It took advantage of a slight drop in the US dollar and an increase in the oil and iron ore prices in Asia. On the top of that, it jumped amid expectations of a fresh inflation data and more aggressive key rate hikes. Inflation in the second quarter is expected to accelerate to a three-decade high of 6.3%. So the AUD USD pair was trading at 0.6958, moving today in the price corridor of 0.6949 and 0.6985. For world markets, the next 2 days will be quite tense. Market uncertainty is likely to persist until the Fed meeting. As the Fed is prone to engineer a soft landing, our analysts rule out a more aggressive key rate hike. And that's all for now. Subscribe to our channel and stay up to date with the latest market news. See you soon!